One of the top 20 banks in the U.S. has shut down after facing serious financial troubles. Regulators seized the assets of Silicon Valley Bank on Friday, leaving many tech startups unable to draw funds. A Wall Street index closed lower on Friday amid investor concerns about the health of U.S. banks. Benji Haya has more from Washington.
It's a bank that mostly serves tech startups and venture capital-backed businesses, including some of the industry's best-known brands. But this commercial bank, based in Santa Clara, California, will be remembered as the second biggest bank failure in US history. The tech lender was already scrambling to raise money to plug a loss from the sale of assets affected by higher interest rates. Then this week, its customers rushed to withdraw money as anxiety spread over SVB's balance sheet, creating what's known as a run on the bank.
Well, it's happened pretty quickly. If you think about the last 24 hours, it's interesting. As a CEO, there's a network of people that have very similar situations. So there's a lot of text messages, Slacks, and emails going back and forth, and people just figuring out what they're going to be able to do. Because in the end of it, if you're all here and things are locked up, it's very difficult to operate your company.
Some companies have all their money deposited at Silicon Valley Bank. For now, they can't access it. It's a desperate situation for many firms.
A bank is supposed to be one of the most secure places that you can work with, right? This is not some big bet. We are not putting all of our company finances in crypto. We put it in a bank that is a very highly regarded bank that most every startup technology company works with. And it's a really important relationship. Silicon Valley Bank was the gold standard in terms of startups and technology companies and venture capitalists.
On Friday, the Federal Deposit Insurance Corporation, which typically protects deposits up to $250,000, confirmed it had taken charge of the $175 billion worth of deposits held at the bank. It also stated that the bank offices would reopen and that clients would be able to access their funds no later than Monday morning. The event has sparked concerns about a spillover effect in the rest of the financial sector. But SVB dealt primarily with the world of tech. There's little systemic risk, the government says, for the wider banking industry.
Our banking system is in a fundamentally different place than it was, a decade ago, and that the reforms that were put into place back then really provide the kind of resilience that we'd like to see. So we have every faith in our regulators.
Yet whilst this collapse is sector-specific, it has raised concerns over rapid increases in interest rates hitting bond markets. Central banks around the world, including the US Federal Reserve, have sharply hiked borrowing costs over the last year as they try to curb inflation. As rates go up, the value of bonds fall. Banks selling those bonds are left with a shortfall, and that's exactly what happened here, ultimately leaving customers in dire straits. Benji Haya, CGTN.